Welcome back to Markets Today. It was a day when the bulls and bears shared the honours and the disappointments. The Nifty and the Sensex have ended largely flat, fighting in a narrow range. The mid-caps lost a little more, so perhaps the bears threw in the towel there. There were double the number of declining stocks compared to stocks that ended higher from where we left them yesterday. But otherwise, both bulls and bears have survived to fight another day. It's a very, very even kind of week so far. But it's a heavy one, expiry week, as well as one that ends with the 6th trading day and the big, much-awaited union budget. So a lot of still fight left in this week. On that note, let's get in more market opinion. Prabodh Agarwal of IIFL Institutional Equities believes the market may consolidate in the run-up to the budget. Let's hear him out.
Market could well go through a soft patch or a consolidation phase in the near term in the run-up to the budget and immediately after the budget. But let's not get distracted by that. I would think that that provides a good sort of way to position for a medium to long term. I don't see a major correction. I've always held that the correction at the index level is unlikely to be more than 4-5%, and of course individual stocks can correct more. But these are the times when one could actually increase the position. We are going to see robust growth. I would say 20-22% profit growth for the large banks over the next 3 years, and between 25 and 30% growth for the smaller banks and NBFCs over the next 3 years. So finance sector is one we like. The other segment we like is industrials. Companies which are strong on the EPC side, on the road side, on the transmission distribution side. As the consumer demand picks up, the petrol prices are already lower, interest rates are beginning to decline, so it's good time to be owning a vehicle, and so that segment I expect to do well.
All right, so that's more opinion coming in on the markets. Well, the headline indices closed out flat, but a number of stocks were buzzing around in trade. So let's go across to Mangla Malu and get a quick wrap going. Mangla.
A whole host of stocks were in focus today. Tell you what, there's some anticipation from the budget in the housing finance companies, DHFL, India Bulls Housing Finance, LIC Housing Finance and GIC Housing Finance, all up in trade today. Also some ceramics companies like Kajaria Ceramics and Somani Ceramics were high in trade, expecting some announcements on the low-cost housing front from the budget. Though the railway stocks saw some profit taking before the rail budget, Kalindi Rail, Tex Rail and Titagarh Wagons all were down in trade today. Sumit Industries, on the other hand, was up in trade nearly 13% after the company announced the launch of a captive wind power plant. The management spoke to CNBC TV 18 and they said this plant will provide the company with nearly 2.7 crore units of electricity at 1.3 rupees per unit. Also, TVS Motors extended its fall on the back of stake sale by CMD Venu Srinivasan. Remember, Venu Srinivasan sold nearly 1.5 million shares in this company on February 19 and 20th. Nitin Fire Protection was in focus as the company announces a board meeting on 9th March to expand into new horizons. The company wants to expand into the defense sector. And finally, Suzlon was in focus as the company announced a project completion of nearly 350 megawatt plants in Brazil. Over to you.
Thanks for that, Mangla. The telecom sector was the other one that was buzzing in trade today. Shares of Bharti Airtel, Idea Cellular and Tata Tele were all weak after the telecom regulator TRAI reduced termination charges for mobile calls by 30% and abolished termination charges for fixed line calls. Brokerages have read this as mildly negative for some of the key stocks in the sector. Rima Tendulkar is here with what she's picked up from the brokerages. Rima.
Thanks so much for that. Well, Kotak has trimmed the EBITDA estimates marginally for incumbent players like Bharti as well as Idea on TRAI cutting the mobile termination charge. Because of that, they've also lowered Bharti's target price to 415 and that of Idea to 192 from 200. They say this development is a modest negative for incumbents. So the direct impact is on the EBITDA. FY16 EBITDA is about minus 0.7 for Bharti and about negative 0.9% for Idea Cellular. But part of this negative impact can be mitigated because there has been an increase in the international termination rate. However, the indirect impact is rather difficult to assess because the indirect impact is a benefit to the challengers, and the challengers can either choose to pass it on to the consumers, thereby creating some pressure in the industry, or they could use it to improve their balance sheet. However, Kotak does believe that the development is a dampener to the voice revenue per minute uptick trajectory. IDFC says this reduction in the mobile termination rate MTR was long pending, but the net impact this time is more benign compared to what we saw in 2009. However, over the medium term, they do not see an impact, because while this may be a negative in the near term, they believe that a higher share of data revenue as well as increasing voice realization will offset the negative impact over the medium term. Edelweiss too has calculated a negative impact on the FY16 EBITDA of Bharti by about 0.6 and that of Idea by about 1.2%. Again, they too reiterate that the EBITDA impact is non-material, but it does improve the new operators' pricing flexibility, leading to headwinds for rate improvements. Back to you.
All right, thanks so much for that, Rima. Let's quickly move on then and talk about the news that came in from Parliament. Well, fireworks on the second day of the budget session. The government tabled the new land acquisition bill in the Lok Sabha amidst vociferous protests by the opposition parties, who staged a walkout. Lata?
Yes, Rajya Sabha is the government's Achilles heel, as it does not have the numbers there. Opposition parties tried to corner the government into a discussion on the slew of ordinances issued in the last few weeks, if you please. The coal, insurance and land motor vehicles amendment bills were the major flashpoints on which the ruling party and the opposition parties clashed.
All right, well, before we sign out, let's hear out Chandan Taparia of Anand Rathi Securities with his top derivative ideas for tomorrow.
First trade is buy on BHEL. It has been making higher top, higher bottom formation from last 6 trading session. Recently, it took support near to 250 zone by making an attractive narrow range price formation. This stock usually witnesses short covering move in the expiry week, so we are recommending to go long with a stop loss of 267 for the upside target of 292. Second trade is buy on Hindustan Unilever. It has rallied well by more than 200 rupees in the last month and now set to start next round of momentum after the consolidation of last 4 weeks. It has taken multiple support near to the 885 zone, so we are recommending to go long with a stop loss of 885 for the upside target of 960.
Yes, tomorrow will be a volatile trading day, and those were some trading ideas for you. With that, we wrap up this edition of Markets Today.
Thank you so much for watching.